But this is where our mystery begins, because as the bankruptcy carried on, Evolve said they didn't have all the customers' money. There was a giant gap between what Synapse said they had versus what Evolve did. According to the Wall Street Journal, up to $96 million might be missing. Evolve Bank claims they're not the problem. They literally don't have customers' money because they were told to send it to other banks like AMG and Lineage. Why? The story goes that in late 2023, Synapse wanted to diversify banks instead of relying on just one. So they set up relationships with other banks like AMG and Lineage to hold customers' money and diversify. Makes sense. Now, most customers weren't aware of this change because it was only noted in an opt-out email basis sent to customers, meaning if you didn't see it when it came through, your money may have been moved without you ever knowing or approving it. Normally, this wouldn't matter, and some fintechs like Yada even pitched it as a way to get increased FDIC insurance coverage, which in hindsight is ironic. But the effect is that everyone's money was shuffled around like a game of three-card Monty. Of course, Synapse, in theory, should have records of where all that money went, but Synapse is now in bankruptcy, and not everyone agrees with their numbers, specifically Evolve Bank and Trust, who says they don't have as much of the customer funds as Synapse says they do. To prove it, Evolve hired Incura Consulting to do their own reconciliation of the bank's balance sheet, and their numbers versus Synapse's numbers is what has created the gap. These results were given to customers on November 4th. Always a pretty good day to hide bad news. That is, you don't have as much savings as you thought you had. Customers are understandably confused and angry. Whoever's fault this is, it's not theirs. So that's what we're trying to uncover. Where is this nearly $100 million of missing funds? Somebody has it, but everyone's saying it's not them.